Today, looking at financials, ticker KBE, recovering slightly from yesterday's market sell-off and what was the worst trading day for stocks in 2019. Financials hit hard for the sixth day in a row, worst daily performance since December 2018. It was the second worst performing group in the S&P. Tech was the worst. Yield move certainly hurts the banks. Joining us to discuss how investors are reacting to all this, Stifel CEO Ron Kruszewski on set today, celebrating a big birthday. Welcome, Ron.
Oh, thank you. We were here, 129 years old, as for Stifel is.
So just curious what broadly you guys are telling your clients during a period like this where trade tensions are escalating and we're seeing more than 700-point sell-offs on the Dow.
Well, you know, let's look back a year. The market's really gone nowhere in a year. It's almost exactly where it was August 6th of last year. And the 10 years down 100 basis points. The equity risk premium is up. So we think markets are fairly valued here. What's going on today is that the U.S. is using its currency, meaning strong employment, a strong consumer, and strong markets, to negotiate trade, which we have to do. And that's something that we tell clients, and there's going to be some volatility about this, but this trade has to get resolved.
Back to that environment, though, where people who save are not particularly getting rewarded if they're looking in fixed income instruments, which I'm sure is among some of your client base.
Well, it's been that way for about 11 years.
Over a decade now,
It's been 11 years, and I think that, but still the United States is really one of the only real developed countries that have real interest rates when you think about it.
What do you make of that? Negative interest rates, across the yield curve in places like Germany.
It's an anomaly that I'm not sure that I really understand. I really don't, you know. But here in the U.S., we do have real interest rates still. Although the 10 years getting close. I think I saw inflation expectations 1.6 for 10 years and 10 years at 1.7, so we're getting pretty close.
You turned cautious, I remember, on the markets last time we had you on. What was that, a few weeks ago?
It was.
Are you turning even more cautious now?
Actually, I think markets are fairly valued. We've had a pretty big sell-off here. And again, when you want to look at it, take a snapshot, look at the equity risk premium, which is nearly 400 basis points now. So I think at these levels, markets have some room to move up here. Trade and what the Fed does is going to be very important. And let's not forget, one of the negatives can be Brexit. People haven't been talking about Brexit very much. That's something that I am worried about.
Really, you think it could have a significant impact? How would you see it playing out if there is a hard Brexit at the end of October?
I think there's a chance with a hard Brexit that could cause Europe to go into a recession, and we would not be immune to the impact. I'm not saying that would put us in a recession, but I think a hard Brexit would be negative for the markets today.
And those negative interest rates will get even worse.
Well, they almost have to. If you're gonna have negative interest rates going into a recession, that will be interesting as well.
Yeah, you're not kidding.
Does it give you any consolation that the Fed is now involved, cutting rates, eyeing trade, eyeing other circumstances, could cut more? The market thinks 3 times this year?
Yeah, I'm not sure that I would be in the camp of 3 times. I think, first of all, I think the Fed has done a phenomenal job. They might have did 1 too many increases last year. They just fixed that. I believe the Fed will do 1 more cut if I was going to try to guess. But after that, I'm not so sure. That will be back to being neutral if they do 1 more cut, in my opinion. And remember, look, employment's strong. The economy is strong. The consumer is strong. We are dealing with a trade situation that's going to take some time. You know, remember this, David, NAFTA. How long did it take NAFTA to get negotiated? 7 years.
Yes, many years.
7 years. So for people thinking that this trade is just going to get resolved next week, I don't think so. But for the long-term health of the U.S. economy, by dealing with that $300 billion surplus that China has with us, trade surplus, it will be positive for the U.S. investor and U.S. market.
So we mentioned 129 years for Stifel.
Yeah.
What's the second half of this year feeling like for you in terms of the company itself?
We said on our earnings call that we see a stronger second half, stronger revenues, stronger activity across the board. And we're going to have ups and downs in the market. Our forward look is for a strong second half of the year.
Even with this recent volatility in the markets?
Even with this recent volatility. We'd like to see the VIX, be below 20. We've got a lot of deals that can get done with reasonable markets. But as I look forward, I'm optimistic about the second half of the year.
Why?
Well, for us, we've gained market share. We've done a number of transactions. We've had 23 straight years of record revenue, if I can tout our own record here. And all things, I'll knock on wood here, this should be another one of those years.
Just wanted to quickly ask you about the retail investor. You've got about a $2 billion business there, and where they are in terms of their investment and their sentiment levels.
I have found, especially over the last few years, that the retail investor, and certainly ones that I deal with, have recognized that time in the market, the old adage, time in the market is more important than timing the market. And our investors look at opportunities. They actually look at this as an opportunity to add to positions. I see very little panicking and off sell. So the investor's engaged, and I would say optimistic.